The United States is going to lose, and that's just math. Everyone thinks a gold tariff would send prices to the moon, but that's not how markets work. Tariffs don't create value, they create chaos. If this happens, the US could lose control of its own gold market, the COMEX. So what happens if the United States government puts a tariff on gold and silver imports? Is that going to be bullish? Is that going to be bearish? What is that going to do? Well, I don't think it changes the case for owning gold. I think people owning gold hedge against a variety of risks. And every day we wake up and see what's going on in the news, there are more risks that weren't on anybody's bingo card yesterday. But what it does do is it's going to create volatility, especially in the in-country price. So as you look at countries like India and Vietnam that have big tariffs on imported gold, what you see is the price inside the country can flip back and forth and kind of teleport back and forth between the world gold price and the world gold price plus the tariff rate, which in our case, who knows, could be 25%, $750, volatility, which is going to make it less attractive to invest inside the country. So I bet more people will buy gold on some sort of account outside the country. More difficult for bullion dealers to hedge, which means wider spreads. So normally you go to a coin shop and you buy that gold eagle for the gold price plus, say, 5%, and then when you sell it back, it's the gold price plus 1%, or something like that. Now, instead, maybe it's the gold price plus 15%, and when you sell it back, it's gold minus 5%. Just harder to hedge, more difficult, more expensive. And countries that have these tariffs, everything inside the country is chaotic, less efficient, things don't work. Sometimes products are available, you come back to the same store the next day, not available, everyone shrugs, we don't know, can't help you, sorry. So the big listed gold market in the United States is called the gold futures market, also called the COMEX. Originally started in Chicago, now basically run in New York. If there's a tariff to import gold, then it becomes difficult or impossible to be a market maker on a platform like that, because the market makers are trading for a spread. So they buy, let's say, 400-ounce bars in London. They sell COMEX, futures contracts short, and sometimes they have to deliver. But if delivery has a $750 tariff, you can see how that doesn't really work. So what will happen is they'll destroy the COMEX market, and either it won't be operated in New York, it'll completely move out of the US, and you just destroy one more American industry, or maybe the market, the financial side of the market is operated out of New York, but clearly all the vaults and all the warehouses have to be somewhere else, whether that's London, whether that's Dubai, whether that's Singapore, some other jurisdiction that's going to win. The United States is going to lose, and that's just math. So the question is, will tariffs make the gold price go up? In a certain sense, it'll make gold less attractive because it's more expensive to buy, higher spread, and you get a bigger spread, bigger discount when you sell it back. It makes it less attractive. But on the other hand, gold is the thing people buy when they don't like and don't trust their governments. So it creates more reasons to buy it. Overall, I don't think it's really price impactful. I think it's volatility impactful and spread impactful. It just creates chaos. Not necessarily rising price, but rising chaos, rising discoordination. Harder to find a buyer when you want to sell it, harder to find a seller when you want to buy it, wider spreads, less efficient, more aggravation, more friction, unfortunately. So for the last several months, pretty much since the election, there has been a lot of importing gold from London, but also Switzerland and even the East. The old cliche is that all gold is moving from west to east. Well, not since the election. It's been moving from east to the United States. And as always with these things, there are a lot of theories and some conspiracy theories to purport to explain, what's going on. One of the more creative ones, I'll use the word creative and leave it at that, is, the idea that, the U.S. government, the U.S. Treasury doesn't have the 8,000 tons that it claims to have. There's going to be an audit of Fort Knox. I think Elon Musk said he was going to show up with a camera and take video of all the gold bars. By the way, that's not how real audits work. Real audits of something like that would take months, generate piles of paperwork, and be boring and something that only an accountant, could appreciate. But be that as it may, okay, they don't have the gold. They're in a rush to get the gold, so they're buying gold, externally. Yeah, leaving that aside, I don't like to touch those sorts of things with a 10-foot pole. There's an obvious spread between London and New York, and that spread drives us, that's the basis spread. That's what Monetary Metals has made enormous amounts of research and reputation, because we provide a free graph on our website. Looking at the spread, buy spot, sell forward, and make profit. It's something on the order of $20 an ounce for 2 months carry. It's not insignificant. So if you have access to essential unlimited credit, borrow dollars, buy spot simultaneously, which is London, simultaneously sell forward, which is futures, which is New York, pocket $20 an ounce. The risk people then come to you and say, there's a risk of tariffs. Okay, fine. You've already bought that gold in London, just move it to New York. So now you have your carry trade, and you take out the risk of tariffs. Tariffs is a $750 loss. The profit on this trade is $20. Do the math, right? So they're moving it to New York to continue to do this profitable trade and remove the risk of tariffs coming in and destroying their business. And that's what drives it. It's very simple. So the question is this going to keep the flow going to keep up forever until London is drained of all the gold and all moves to New York? I wouldn't think so. I would think that we'll get to a point where either there's clarity that we don't have tariffs, in which case this kind of trade stops. I don't know that the gold would all immediately be transported right back to London right away. Imagine once it's in New York, it'll tend to stay there. There tends to be an inertia to these things. Or we do get tariffs, in which case no more gold coming to the United States. That is going to be a hard window, slam shut. And then after that, you can export it apparently without any tariff. The market's going to have to figure out, where to do this trade, and it can't be New York anymore. So it could be Canada, could be London, could be Dubai. I bet all these other jurisdictions are, rubbing their hands with glee, saying, come on, bring it. We're looking for that business. But no, so I expect this is a temporary dislocation.